How's it, guys? Once again, welcome. Everybody is having a great weekend. This is boy, your boy, Kitiopa FX, representing Kitiopa FX. Okay, so please, you can follow my YouTube channel at Kitiopa FX. Like and subscribe for more content like this. So we're trying to actually post a lot of good videos and insight and education materials. Okay, guys. So I'd like you guys to follow my channel, to like and subscribe to help it grow. Okay. So today we are doing part 2 of the chart pattern. Like promised, I did drop the part 1 of the chart pattern. I'm just gonna add it on the link description so you can be able to watch it as well if you didn't watch it. And we did a few chart patterns on pattern continuation. So we did the foreign wage. I mean, we did the flag, which is the bullish flag, and the bearish flag as part of continuation pattern. And then the last part on those continuation pattern that we did is the expanding triangle. Okay. So the expanding triangle, guys, is the last part on the continuation pattern that we did. And then we are going to jump into the reversal patterns. Okay. So the expanding triangle also is your bullish continuation pattern in a sense that the trend the trend is in an uptrend, right? And so you're coming from an uptrend and you've got an impulse, and then you've got a continuation. So instead of having a flat flag or a steep flag, in this case you have an expanding triangle sort of flag. Okay, so the same concept we did on the bullish flag, on the bull flag, are the same concept you use on the expanding triangle. You look for entries at your lowest point. It can be, you can be looking for a double top, I mean a double bottom, or you can be looking at certain kind of formation, or you can be looking at maybe inside this expanding triangle, you've got sort of like a falling wedge or a falling channel. You can be looking for something like this, just a bit of this, just this part here. So I'm saying about this part. So you can just be looking for a part like this. Just this part around here. That's what you can be looking for in the expanding triangle if it's forming towards the end of the support. Okay, if you see something like that forming, that would be also a good confirmation to take your entry on an expanding triangle, depending with the size of the expanding triangle that you're having. Some expanding triangle are a little bit smaller, but in other cases, when you find that there's been a lot of momentum in the market and price has like really moved a lot of pips, instead of making this much smaller correction pattern, it will tend in making a much bigger correction pattern. In this case, that's where you'll be able to find much bigger expanding triangle. So we are going to jump into the charts and then I'll show you the type of expanding triangles that we sometimes get to find. So an expanding triangle is also a bullish continuation pattern. My entry personally would be from the bottom of this triangle here. That's where I would get my entry. Or in this case, you might get an entry from just right before the break of the triangle. So this is what I'm saying, how you'd be able to get an expanding triangle right before. So this is how you'd be able to get an entry on an expanding triangle, guys. So just want to show you how you'd be able to get your first entry, right? How you get your first entry on an expanding triangle is this way. So price would move correctively. Okay, price would move correctively, and then it impulses. I want to change the color for this so that you guys can see. Why would that be a very good way of taking that trade, in a way that when price moves correctively to go and touch the support? Okay, so this is the same thing I was saying. You would be looking for something like this, a falling channel or a falling wedge, inside that expanding triangle. So inside that expanding triangle, you'll be looking for a pattern that would also confirm your bias, okay? Already, because you know that this is a continuation pattern, an expanding triangle, but you're looking for entries, okay? So when you're looking for entries at that particular time, you'll be looking for a pattern like this. So this is, you can say you've got either a falling wedge or you're having a what? A descending channel. So already when you see such something like that, it's already showing you a reversal pattern. Okay, these are reversal patterns. So I'm going to jump into the reversal patterns as well, so you guys can be able to understand. But I wanted to start from this point of view because it's very, very important, guys. Okay, so I'm going to just quickly jump into some few reversal patterns that we're going to look at, so we can be able to understand exactly what were you talking about. So I want to just write down here reversal pattern. So reversal patterns, okay. Okay, reversal patterns. Okay, guys, so these are reversal patterns that we're gonna look at just now. Okay, but I wanted to explain how the expanding triangle plays out. The same way with an expanding triangle in the downtrend, okay, you would also look at it the same way and you use the same concept to look for entries, okay? So this would be our first entry on the expanding triangle. If we're looking for a buy. So we're just going to enter the buy right at the break of this channel. Okay, so the inner channel, okay. If you've been given that opportunity and you see there is a falling channel or a falling wedge, you enter your position right there. Your stop loss will be below the structure and your target will be the length of the flagpole, okay? So that will be our first entry on the expanding triangle, guys. So your first entry on the expanding triangle, your long position would be, you'll be taking it because of that confirmation and knowing that you've been given the opportunity to spot a falling wedge or a falling channel, and then you have a confirmation of a continuation of that bias, okay? So this is our first entry. And then our second entry would be if price comes to this resistance level here, fails to break it, okay? If price fails to break that resistance level and then retraces, but when price retraces, it doesn't go below. So, okay. So when price retraces from that resistance level, it doesn't drop impulsively. Instead, it starts to drop correctively, okay? Price start to drop correctively, forming a what? Maybe a steep flag, okay? Because now, at this point, you've already had a correction that helps you take that entry there, the first entry, and then price impulses. So it's impulse correction. So guys, you need to be able to understand that. Now, once when you understand the three phases of the market, that is impulse, correction, and continuation, you're going to be able to apply those methods in every single aspects of the charts that you see it fit, okay? So if you just need to be able now to really, really simplify your trading and understand all these things, okay? So now we'll be looking for that continuation, okay? Okay, guys. So that means if you was looking at an expanding triangle and you didn't know how to get an entry on an expanding triangle, so these are the things you're going to be looking for. You'll be looking for your first entry, which you are going to get either based on the double bottom that is formed or the falling wedge that is forming in that expanding triangle, and then you get your entry to the upside. But if at that point price doesn't break impulsively in that structure, hits the resistance level and then pushes down, not impulsively, but correctively, forming a steep flag or a falling channel, then you are going to be able now to reassess the chart and look for your entry. So with this type of retracement, guys, the best way to enter the trade is at the break of that structure, okay? At the break of that structure, you are going to have your entry and your stop loss below that structure, and you're targeting the highs, okay? So you've got two different ways you can be able to take advantage of a setup like this, okay, guys? So I like the fact that I've been able to just explain it to you in that type of manner, and then you can be able to actually pick it up. So that's how we'll be able to take our trades on the expanding triangle, which is our continuation pattern, okay? So now I want us to jump into reversal patterns. So remember, guys, this we're doing is chart patterns part 2. We did chart patterns part 1, and I'm just going to add it on the link description so you can be able to see it as well in case you didn't watch it, okay? So now we are on the reversal patterns, okay, guys? So on the reversal patterns, our first pattern that we're going to look at is the rising wedge. So a rising wedge is a bearish reversal pattern. Why so? Because a rising wedge happens in an uptrend, okay? So a rising wedge usually takes place in an uptrend. So you've got an uptrend, you've got the market that is moving up, okay? That's your uptrend, right? You've got your market that is moving up, and you're looking for entries. You're in an uptrend right there. So you'll be looking for entries in an uptrend. And what we look for in an uptrend, we'll be looking for signs or reversal patterns, or maybe continuation patterns in an uptrend. So given that, we open a chart and this is what we find. We find in that chart, we find an ascending channel. Okay, so now I want to combine the concept of using an ascending channel, okay, and the rising wedge. They are both reversal patterns, but you can also be able to combine them, because at some point you're going to find that inside the ascending channel, there is a rising wedge. Okay, what do I mean by that? This is what I mean by that. Okay, so we're going to draw our ascending channel. Sorry guys, this might take a little bit of time, okay, drawing this ascending channel, okay? But I want to just be able to draw it and then explain it to you guys what I mean, that you might find a rising wedge inside an ascending channel, okay? This is very, 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 very good content, guys. I need you to like my page and subscribe, okay, for more videos like this. A lot of people won't give you this information for free. They'll be charging you for it. So all you can do for me is just a favor of liking and subscribing to my channel. Thank you. This is a bit too, because I want to leave space to put the ascending channel there. Okay, so this is what we have. Ascending channel, it's in an uptrend, price goes there, bounces, 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 and then breaks. Bounces, 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 then breaks, okay? Now, as we break, guys, this is where I want you to see. As we break in that ascending channel, this is how we're gonna be breaking in that ascending channel. Okay. That wasn't so cool. It's supposed to be there. And then from there, we're supposed to have a break. Okay. From there, we're supposed to have a break. And then a breakout. Okay. So guys, I know this is not the most cleanest, but I just want to be able to show you exactly what I mean by how you can be able to use these type of patterns and inside structures. Okay. So this won't be the cleanest drawing of our ascending channel. I mean, a rising wedge. Okay. Okay, guys. So now here we've combined. So on this drawing here, we've combined the rising wedge and the ascending channel. Okay. So what I want you guys to look at is how we can take advantage of setups like this and patterns like that. Okay. So we were saying the rising wedge is your reversal pattern that takes place in the ascending in an uptrend. Okay. But obviously you're not only gonna see it on its own. Most of the time you find it that it's inside the ascending channel. That's where you can be able to take advantage of that. So in this case here, you might either have a rising wedge or you might have an ascending channel inside the ascending channel. Okay. So you'll be able to have patterns within patterns. Okay. So when you see the rising wedge, there are two ways of taking that entry as well. The first entry is at the break of that wedge. In your second entry, your first entry is either you'll be looking for a double top formation, which is a reversal pattern, or you'll be looking for a break out of that rising wedge. Okay. The safest one is the break out of the rising wedge because that's your reduced risk entry. And your first one is your risk entry because you're entering inside the pattern. Okay. But you'll be getting your confluence on the double top formation. So I'll just show you guys how you can have your first entries. And your first entry. So let's say we had a double top there forming inside just above just above the rising wedge. Your first entry will be right there, your risk entry. You'll be entering at the top of the structure. Entering at the top of structure and your target is low of that structure. Okay, so this is how you have your first entry, guys, on the on the rising wedge. Okay, because already your rising wedge is your reversal pattern. Sometimes you just need to be very patient and wait for the pattern to play out, and then you take your entry. So that's your conservative entry, which is at the break of that structure. The only difference with your risk entry and your reduced risk entry is your ratio reward. Okay, your risk ratio reward. On your reduced risk entry, you've got a much slighter, bigger stop loss, whereas on your risk entry, you've got a very tight stop loss because it's a risk entry. You are tracking the trade within the pattern before the bias can be fully confirmed. Okay, so that's how you'll be able to enter your first entry and your second entry. As you can see, your second entry is at the break of the structure, and then your target, you're targeting the low. Why are you targeting the low? Because the low is the 90% correction of that ascending, of that rising wedge. So every time you're taking entries on these patterns, your first target you're targeting is the 90% correction. Okay, on everything you'll be targeting your 90% correction because in the way that they are formed and in the way that they behave, your first target is your 90% correction. The same way goes for the ascending channel. So if you can look at this ascending channel, and if we took our trade in this ascending channel based off that rising wedge there inside that ascending channel, our entry will be at the break of that wedge. Okay, at the break of that wedge. the break of the rising wedge, and we'll be targeting what? The 90% of that rising wedge. That will be our first target, okay, guys? Why would that be our first target? Because we're targeting the 90% correction. We don't want to be too ambitious. There's nothing wrong with being too ambitious, but you need to follow the rules. Okay, guys, so you'll be following the rules and you'll be targeting the 90% correction rule there, waiting to see what price shows you. Okay, if price shows you more continuation patterns in that area, then you can be able to extend your TP. Okay, so in this case, what we are saying, guys, is don't just stick to one bias. Okay, don't just stick to one bias. You need to be able to be very neutral, teachable, and be able to change and scale in as well as evolve. Okay, so if you took that entry there, that position, look at the rewards. The rewards that you'll be getting here. Okay, so if you take the position based off that ascending, the rising wedge, your first target is the 90% correction rule of that rising wedge. You move your stop loss. So you don't close your position, you move your stop loss into profits and move it to break even, and move your stop loss into profits or to break even, and then you wait, you pay attention to see what is price going to be telling you. Is price going to break that channel, or price will be ranging inside that channel? So those are the things that you can just learn over time, guys. With experience, you'll be able to understand these things, and with experience, you'll be able to notice and really be able to take your entries and know when you need to get out and when you need to stay in a trade. But you need to really let your wins run, because your wins, the more your wins run, the lesser you have pressure on thinking about your losses. Your losses are part of doing business. You need to understand them, that they're part of doing business and they're part of learning as well. Okay, but you don't want to keep giving money to the market without you learning from your mistakes. You need to be able to learn from your mistakes. Okay, guys. So that's how we'll be able to take our trade there. So I just simplified it in a sense that I've been able to explain on how you can be able to capitalize on the rising wedge on its own, and how you can be able to capitalize on the rising wedge when it's taking place inside the ascending channel. So that being said, I've already explained on how you can be able to take a trade from an ascending channel, because your ascending channel is your reversal channel pattern, and you'll be looking for a 90% correction rule for your TP level. Okay, but before you can be able to take that entry at the break of the channel, because imagine if you'll be waiting for a break of that channel, what about the opportunities that are inside the channel? Or are you just going to let go of those opportunities? Look at this. Within that channel, you are able to find more opportunities. Okay, this is a reversal channel. The ascending channel is a reversal chart pattern. Okay, but that doesn't necessarily mean that you'll be only waiting for that reversal channel. That reversal momentum of the bearish momentum reversal. No, you'll be also taking advantage of the opportunities that the market will be giving you right inside that channel. Okay, so this is what I mean. Look at how we were having this the falling channel, okay, inside the ascending channel. So you'll be taking advantage of those things. So you'll be targeting the high. Okay. Already you've had your first impulse, correction, continuation. Okay. So it's easy, guys. You'll be taking your entries at the break of that structure. You take your first entry, your stop loss is below that structure. You take your position there. It hits the resistance channel line. You close out, that's your TP. Even if you can be able to use your TP by measuring the length of this pole here. That should be your target TP, okay? Simplified. This is trading made easy, guys. Trading simplified, okay? Not the other way around, okay? So once when you have your impulse, you've got your correction, and then you can see that now the trend is about to change, because look at what happened here inside this channel. You had your first impulse, correction, and now you are correcting again instead of impulsively. So you're impulsively to the upside, but in a corrective way. You're moving to the upside, but in a corrective way. You wouldn't want to trade this market because it will be choppy. When you enter, it goes back, it goes up, it goes down, it goes up, it goes down. So you won't want to get involved in that type of structure. Okay, you'll be waiting, hence you'll be waiting for a breakout in that structure and take your reversal trade. Okay, which is a bearish trade. Okay, you'll be taking a short position. Okay, guys. So that's it on the rising wedge in the ascending channel, which are your bearish reversal chart patterns. Okay, so now we're going to jump into the bullish reversal chart patterns. So we just covered the rising wedge and the ascending channel. So now we are going to cover the falling wedge. We're going to cover the falling wedge and the descending channel. So the same concepts, guys, the same concepts that we use on the rising wedge and the rising and the ascending channel, those are the same concept we use on the vice versa of those patterns. Okay, the opposite of those patterns, I mean. So on the falling wedge, guys, so the falling wedge also would happen in the descending channel, and you'll be looking for entries as well. So you'll be looking for your bullish entries to the upside, entries for buying, entries for going long. Those are the type of entries you'll be looking for. And your target still remains the same. Your targets are 90% correction. 90% correction are your targets. Right at the top where the correction started, that's where your target will be, okay? So how do we get involved also in the in the descending channel and the falling wedge? The same concept we did on the other chart patterns, that's the same concept we do as well here. Okay. So you have your descending channel, and inside your descending channel, you'll be finding your what? More of your bearish continuation. You'll be finding your bearish continuation patterns. So you need to be able to know that within a structure, there are patterns and patterns within patterns. So you cannot have everything traded at the same time, but you need to make your trading very, very simplified in a sense that once when you learn about one chart pattern, you should be able to use it and utilize that chart pattern in every aspect that you come across in, because sometimes these patterns are not picture perfect, guys. You won't find them being picture perfect. You just need to be able to really make sense of it, but you always see them in the market. They're always there in the market, guys. They are always there in the market. If you cannot see it, then don't look for it. It has to be there. It doesn't have to be complicated to notice and spot a chart pattern. If you're having difficulties to spot a chart pattern in the chart, that means it's not there. If it's there, you won't unsee it. Definitely you won't unsee it. So very, very important, guys, that you don't force this type of patterns. Okay. So this is an example on the descending channel. Okay. So these will be your continuation patterns. Okay, guys. These will be your continuation patterns. You can see impulse, correction, impulse, correction, impulse, correction, and then impulse. Okay. So now here we want to see how can we be able to actually take an entry inside the what? The descending channel. Also, we'll be looking for what? We'll be looking for a falling channel or a falling wedge. That's what we'll be looking for as this is just run out of okay. Okay, so So that's what we'll be looking for, guys, there, okay? Mhm. Okay, this is not nicely drawn, guys. Sorry about that. But I just wanted you guys to see that what we'll be looking for is the break of that structure, right? That's what we'll be looking for. Price is actually supposed to go and break that side. Okay, so this makes it easy in a sense that we've already explained most of these things on the rising wedge and the ascending channel. But now this is the opposite of what we were explaining right there. Okay, guys. It just takes a little bit of time to draw these things. Sorry. It needs to be a bit perfect, even though the charts won't give us that picture perfect type of these things. Okay, guys, but we need to just make them be perfect. Okay, so you're going to have your falling wedge right there. Sorry, guys, this is not so perfect. Okay, I don't like this, you know. Yeah, so we'll be looking for what? We'll be looking for a falling wedge to take our entry inside the the descending channel. Okay, guys. So it's just basically looking at it's basically finding these patterns in a particular given moment that you are represented with in the market. You need to be able to look for these patterns, because these patterns, they do happen over and over again. Okay, over and over again, they're always happening in the market. So once when you're able to get to really understand and learn them, you'll be able to put yourself at least 75% of 75% consistency in the market. So the most important thing is for you to be able to find these things and to be able to know how to capitalize on them, how to take your entries and how to take your exits as well. It's very, very important to know how to take your entry, because even if somebody sends you a signal, when somebody sends you a signal, you don't know why you're entering the market. So this is the disadvantages of not wanting to invest your time, of not wanting to invest your time in learning, okay, and you're busy investing your money in signals. That's a very, very wrong way of going about it, because guys, you don't want to be risking your capital that you don't know why you are entering a position. Okay, you need to be able to know why somebody sent us a buy signal. Why did they send a buy signal on a certain pair? You understand, guys? So you need to be really able to understand those things. Imagine maybe they sent a buy signal in that pair because they are trading this, they're trading, because they're trading the what? They're trading the, because they're trading the bearish reversal pattern. They're trading the bearish continuation. Imagine they sent you a buy and they said, okay, like what we are looking at right now. What we're looking at right now is the descending channel. Imagine they sent you a buy from this area. They sent you a buy from this level here, because they understand that what is happening here initially is a correction. So they want to take advantage of such a correction, which is not very highly advisable, because this is like a scalp position. Okay, so they tell you to take a buy and they say stop loss 15 pips, take profit 30 pips. Okay, obviously it can be a good trade, but you don't know why you're buying in that area. Obviously, you don't know why you're buying in that area, when initially you need to be trading with the trend. Okay, they say the trend is your friend. You have to trade with the trend and not against the trend. So that buy they'll be sending for you will be against the trend, and the chances of you losing out on that position are very, very high, because first thing first, you don't know why you're trading that position, and you don't know where you're gonna exactly place your stop loss. Are you entering at the right time, or is it too late for you to enter that position that they've called out for you? So you need to be really able to understand and know where you're entering and why, as to why you're entering that position. If they send a sell in this position, you stand a very bigger chance of capitalizing on that sell, because if they say, guys, sell sell GJ, top loss 20 pips or 25 pips, and they say target 40 pips. You stand a very, very bigger chance of making it in this type of signal that they send for you as a sell signal. Reason being because you are now in the descending channel that is still falling and still forming the pattern, and price is far from reversing or far from changing the structure, because even when you hold that position, price will impulse to the downside, make a correction, and start impulsing and start moving correctively to the downside as well. Wallace is trying to prepare for the momentum shift. Okay, guys, so it's much easier for you to be able to understand and be able to capitalize on something if you are able to really, really know what is going on, just because you've invested your time in learning, and you've also invested your time and money in learning as well. So you need to remember that trading is not a get rich quick scheme. It is a get rich quick scheme if you know what you're doing, and not when you don't know what you're doing. So you need to be really able to take time. Give yourself time to learn, give yourself time to understand these things. And then in the end, it's gonna pay off. Okay, guys. So once again, that was your boy Kichepa FX, representing Kichepa FX Capital Link. So we just did our chart patterns, and I'll be signing out. So we'll see what we'll be able to actually do on the next lessons. But what I would like to do on the next lessons is to be able to jump into the charts and be able to show you guys just the patterns we just learned right now. I'd like to be able to jump into the charts and be able to actually just explain these patterns that we just saw. Okay, I'm not sure if we still have time, but we are going to try and post maybe a part 3 of chart patterns, versus chart patterns on the charts, okay, and not like on the blank page like we just did, because while we did it on the blank page, we're trying to just educate a few people out there that don't really understand our patterns and structures, just to be able for them to be able to have an idea and a clue of what we're really looking at, and how we're actually taking our trades and taking our positions in the market. So guys, so thank you once again. Please go like and subscribe my channel at Kichepa FX and help the channel grow, guys. Ciao. Thank you very much. Awesome.